Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be having a look at a particular pattern which looks like that it's only a matter of time before this breaks to the upside with a higher probability. And we're going to do a measure of exactly where this pattern could lead us in terms of the upside for the end of this bull market. And as per usual, we'll have a look at exactly what's happening in the background of Bitcoin by looking at the wider markets, as well as making head or tail of the Bitcoin short-term pricing by looking at the 60-day cycle. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So as per the main theme of this video, I'm going to be having a look at this particular pattern that's been developing with Bitcoin since the end of the last bull market in November 2021. So since then, we have this incredibly powerful pattern which has a great potential to break to the upside. So what is this pattern I'm talking about? And this is the pattern I'm talking about, the cup and handle pattern. We normally see these patterns forming between 7 and 65 weeks. So in between that period, that would be a very powerful pattern. And the bigger the time frame, the more powerful the pattern. So just keep that in mind. And the ranking of this pattern is actually the overall performance is 3 out of 39, with 1 being the best. So it's one of the best and most powerful patterns that you can see on a chart, and it has a 61% probability of actually meeting the target, and I'm going to have a look at the target a little bit later on. So this is the pattern. Let's have a look at it very carefully and analyze it. So one of the things I want to just highlight for you is that this current pattern that we've got is completely unique to this particular 4-year cycle. So this is the actual pattern from the end of the last bull market, which was here in November 2021. We've got the cup, and we've now got the handle. And this period between the start of the cup and the end of the cup here should be between 7 and 65 weeks. So this is normally what you would normally get. But what we've got here is a much bigger, much greater pattern developing. But the reason why I'm saying this is unique is that if you go back to the first cycle here, the top of the cycle was at this point, it broke out here. There was no handle at this point. There was a cup, as it always has been, like here as well. You've got the cup, but unfortunately no handle here either. So in each of these previous cycles, what we've got missing is a handle. And some would say this was a cup and handle, and this was on a smaller time frame here. So you got the cup and then the handle here, and then we broke out. So we broke out here as would have been expected. So this previous cycle was the only one that resembled something of a cup and handle pattern, but on a smaller scale here. So this pattern that we've got is totally unique to this cycle, but we've never had this pattern develop on virtually the whole of this current cycle here. And this pattern has stretched over 122 weeks up to this week from November 2021. So this is double the number of weeks in terms of the pattern developing. And what I want to do is give you some sort of a measure in terms of how accurate this may well be in terms of where we can expect the price of Bitcoin to top out, which we're expecting somewhere towards the end of 2025. There was another box here you may have noticed, but it looks unlikely that we're going to top out at the end of 2024 now. So I've taken that box completely out of the picture. And if we do a measure in terms of what we could expect the price of Bitcoin to be once it breaks this neckline of 73,800, what could this price be up here towards the end of 2025? And to do that, all we need to do is just basically take the bottom of the cycle in each of these cycles. So the bottom of this cycle here was around about this point to the neckline where the cup is, and that gives you around about a 1300% ballpark figure of where this could be heading. So if we have a look at what happened after breaking the top of this neckline here, the previous all-time high, so 1350% from that point would have taken it to up to this point here. So you can see that there was a bigger move than the actual cup in the first cycle, but it gave you a rough ballpark figure of where it was going to end up. And if we have a look at the second cycle, from the bottom here to the neckline, that was a 900% move from the bottom to the neckline. And what happened afterwards from that neckline onwards to the top here at 19,800, you can see quite clearly this cup was virtually the same increase in percentage from the bottom here to the neckline and from the neckline to the top of this market here. So this was an incredible prediction for the top of the bull market. While the first cycle was greater than this cup, this was virtually exactly the same as the cup level here. And in the last cycle, and there are two measurements I want to do here, very important, because if you just take it from the bottom here at the 3,100 where it bottomed out to the actual neckline of that previous all-time high, that gives you about a 540% increase here. And then from the neckline to the 69,000 top that we got over here, that was around 260%. So this was about a half as much. However, if you take the measure for the actual cup here, and I'll show you this in a close-up just to give you some good understanding of what we're really actually talking about. So this is the mini version of this cup and handle that formed in the last cycle. So the top of this point here, where the cup would have formed, would have been 14,000. So if you take this line here, and of course this is the handle part of it, and then we broke out above this line here, at this point here, around about October 2020. About 1 year before this actually topped out at 69,000 here. So this is what we're measuring, because this resembles the cup and handle that we've got currently in this cycle. So if you measure from the 3,100 bottom here to the 14,000, what you get is about a 340% increase in the cup part of it. So the question is, was this giving us a clue as to what was going to top out here? Well, if you take it from the 14,000 to the 69,000 here, you can see that that was a 400% increase. So once again, this gave us a very good idea, a very good ballpark figure of when we break out, this is the actual outcome it's going to be. So the question is, based on what's happened in the past and giving us an idea to elicit some information and give us a guidance as to what could happen over the next 12 months, we can use this measure as a guide as to where we could possibly end, because this is one of the things that I get asked over and over again, and nobody has a crystal ball, nobody can tell you with any certainty, but what we can do is elicit information from the past to give us some guidance for the future. And as Belkowski says here, the percentage meeting price target is 61%. So 61% of the time, it should meet the guidelines of the measure from the bottom of the cup to the neckline and what we can expect after the neckline. So this is our current situation here. And this is the bottom of the market at 15,400. And if we take that to the 73,000 neckline, 73,800, which was over here. So what we've got there is a 378%, call it 370% move from the bottom to the neckline of the cup here. And if we take that measure of 370% from the 73,800, that gives us a ballpark figure for the end of the current bull market at $350,000. Can I just please remind people, I am not making predictions. I'm not here to be right or wrong. I have no interest in boosting my ego to try and get a particular price and say, yes, look what I said and this is what's happened. I have absolutely zero interest in trying to boost my ego in that way. I'm just here to read the charts, elicit information, look at the historical perspective, and give a ballpark figure in terms of where the price could possibly be. These are all about probabilities and possibilities. I don't have a crystal ball. I don't even know what I'm going to have for lunch today, never mind give a prediction about a price in a year's time. And we have a geopolitical situation developing in the background which could completely knock this to the downside at any time. So this is always the danger. This is the downside risk that we always have. So I just want to remind people to put everything into perspective. I'm just here to give you some idea based on the charts, based on the facts of what's happened in the historical context, to give us some sort of an idea of where we're heading over here in the absence of unexpected events taking over. So based on the Bulkowski testing of these patterns, and out of 39 particular patterns, so this is the third most accurate chart pattern, very powerful chart pattern in classical charting. So I hope you'll find this useful. So I just want to remind everybody, this is not a prediction. This is a possible target based on the probabilities of what's happened with particular patterns like the cup and handle and what price it's giving us over here. Okay, so I'm going to move on to the news out there regarding Bitcoin and the types of things that we should be aware of what's happening in the background. So we have this article here, which is basically giving the reason why we are in this space here. And that is that the Bitcoin's price return stands apart from the crowd. And it goes on to say that Bitcoin is the best performing asset for returns despite its volatility, according to the New York Digital Investment Group, NYDIG. So this is the reason why we should never forget why we're in this space. We're here to get the greatest amounts of returns based on what's happened in the past. And if we move on to the liquidations heat map, this has been incredibly accurate in predicting the actual range which Bitcoin has been bouncing off from the tops and the bottoms in the short term. So what we've got is these yellow zones, which are very, very important. And the only yellow zone resembling this is at the bottom here at 61.6. But as you can see, it's not a very strong zone as these more highlighted yellow zones. So the lowest of these main zones is actually at 63,500. And the top of that zone is actually at 64,900, and you can see with this price action coming up here, we've already hit that. So whether we've topped out here, only time will tell, but we are at the top of the zone, and we do have a zone at the bottom here at 63.5. So we may well come back and retest that before we move forward. And if we move on to the ETF overview here and look at the asset inflows and outflows, we can see that there's been a little bit of a change from last week. We noticed the previous week that these numbers were getting more and more green, but we still had quite a few red numbers like these dotted around. But this week we've got even more green numbers and at much higher levels. So we can see 2,230 Bitcoins came in over the last 7 days in just the BlackRock ETF here. And while Grayscale lost 747, this was more than made up by 3,000 from Fidelity here and 900 by ARK. And the only other ETF that was bleeding their Bitcoins was the Grayscale Mini Trust. So both the Grayscales are the only ones that are in the red here, and the rest are all in the green, which tells us that there is some move going on in the background with a lot of people buying up Bitcoins in their ETFs. And we know that this feeds into the Bitcoin price somewhere down the line. And if we have a look at the wider markets, we'll get some sort of an idea of what are driving the markets. And as we know, the dollar generally has an inverse relationship with the markets. And currently we've got is a divergence of that particular principle. So while the dollar's been going up, we've also seen Bitcoin going up over the last couple of weeks, as well as seeing gold and silver. So the metals have been going up at the same time, which is a bit of a rarity because you would expect as the dollar's going up, the markets would be going down. So we'll just have to wait and see how long this holds. But certainly the counter trend rally that we've been waiting for, that we get here, we were expecting another one either here or a little bit lower down. So we've got it at this point here. And depending on where you measure this, so if we measure it from the top of this red symmetrical triangle, the current move for the dollar has come exactly to the 50% Fibonacci retracement. And we know that this has an affinity to go to the 61.8, which is at this point here, about 104. So this may still have a little bit more to go before we get the expected turnaround and to make the series of lower highs that we've made all along so far. So this may well be another lower high in the trajectory of the recent history that we've got. But if we measure it from this high, once it's left that symmetrical triangle, if you measure that to the bottom, you can see that we actually have already hit the 61.8 golden pocket here. So this is where we're currently at. So either we're going to get a rejection from this point, or if this is the measure that's going to be more truer here, then we're going to get all the way up to 104, and at the moment it's at 103.0. So this is the ballpark figure that we've got where you would expect some sort of a turnaround and a reversal for the dollar, and that will allow the wider markets to have that bit more wriggle room to go to the upside. So from the dollar's point of view, we are getting a little bit of a green light for the moves to the upside for the other markets here. And if we have a look at the SPX, we can see that while the dollar's been going up, this has been showing some really good bullish signs. And currently where we are with the SPX on the 60-day cycle, we're on day 48. So for the end of the cycle here, we may still have a little bit more to go, because we do expect, with a high degree of probability, wherever it's going to get to, maybe up to about 6,000 here. So this is a possibility. We'll move up to here and then have the end of the 60-day cycle pullback, maybe to these levels here, before we make another move for the next cycle. So obviously very important to have a look at the timelines and the time frames to give us some sort of an idea, guidance to actually see where these are going. And the thing is that you can't really predict that this is going to end here or here. All we can do is look at this trajectory, because when you look back, this has been an incredible ride all the way back. So the general trend, when you look at it, this really began at the end of 2022, just like with Bitcoin, where the markets had bottomed out. And this trend from here all the way up to this level, you can see quite clearly we have an upward trajectory. And yes, we fall below it here and have some of these corrections on an ongoing basis, so you would expect that. But until there are major signs that we've topped out, those people who are invested would probably do well to remain invested here and keep riding this until we get a major sign of a pullback and the end of the bull market. So the SPX is absolutely powering ahead, and those people who were calling this as a double top and then a triple top, and of course that was a possibility, but the probability didn't seem that high because there wasn't any major signs of a big pullback here. And if we move on to gold on the weekly time frame, we can see that this is just powering ahead. Obviously, we're having little bits of pullbacks along the way here, and we may well be having another one here. But again, the trajectory is really powerfully to the upside. And then the last week close was this particular candle here, which is basically a long doji candle at the bottom. A long wick at the bottom usually spells the fact that there's a lot of buying coming in at this point. The only danger here would be that at the top of a trend, when you start getting these long doji candles, it sometimes spells that this is an exhaustion of buyers. So just be aware of this. You're starting to get small-bodied candles at the top of a trend, a little bit like here, and we got quite a big correction at this point. So we may well be having a little bit of a correction here, but the general trend is still to the upside. And the monthly time frame is still looking very, very bullish. And if we have a look at the silver on the weekly time frame, we can see quite clearly we've broken out at this point of its previous all-time highs here. We've come back and retested that level several times now here. So it looks to me with a higher probability that this is trying to follow gold to much higher levels. And if we move on to the 60-day cycle for Bitcoin to give us some sort of an idea of where Bitcoin wants to head in the coming days and weeks, what I've done is to draw this little channel here that when we topped out at 66,500, at this point, we came back to these levels here at around about 60,000. And obviously, as you can see, there is a very strong resistance and support line here at 61,000. We bounced off that, but once again, we got rejected here at 64,000. And what we did by coming down here is to make a lower low at this point, having made a lower high in these 2 points here. So when we're coming up at this point, you would expect this to have another leg to the downside. So what it has done instead was that this was more of a bear trap here. So people expecting this to go much further down, it's jumped off there, gone to the top of the trend line, and what we've now got here over the weekend is a big break outside of that channel. And currently, as I'm doing this video, the high it's been to is 64,805, which if you look left to the previous high here, at 64,400. So we've already broken the top of that previous trend here. So in all probability, this may want to go a little bit higher, but we have got this very strong resistance point here at the 65,000. And this is where time and time again, it's actually found a lot of resistance. So we are really right at the resistance point. And the question is, will it break to the upside here to retest these previous much higher levels here at 73,000 and 70,000 here? So this is what we're really wanting it to do before the 60-day cycle ends around the first week of November. if we can get ourselves above the 70,000 mark at this point here, then it sets up very nicely for the next cycle in November to go and break the previous all-time high of 73,800. So this is where we're at. Things are developing, but we are at a critical juncture where we really need to get to the 70,000 from where we are. So the overall picture so far looks like that with this cup and handle pattern developing and being after the halving, we know that between 6 and 12 months, we tend to break this neckline of the previous all-time high. And that this is where we end up with the bull market. So if that is the traditional way it's going to end this time around, then we've got 12 months to go. So we've got just over 12 months to go to the end of this bull market. And it just seems like a matter of time before we break this neckline. And I've given you the price target of what this particular cup and handle measure is to the upside here, based on what's happened in the past with this particular cup and handle pattern, and also giving you the measure from here to there. So it looks like that our journey from where we are currently to where we want to get to and where we've been since 15,400, we're continuing this journey to the top of the bull market at the end of next year. And for those of you who are interested in our portfolio with the Bitcoin miners, as you know, we have a private member section running here with the Bitcoin miners because the miners have been a leverage play on the Bitcoin price. So just to give you a ballpark figure, from 15,400, while Bitcoin went up to 73,000, which was a 370% move, so from the bottom to the top in this current cycle. So for the Bitcoin miners, and I'm using Marathon here as an example of some of the other Bitcoin miners, some of which have gone higher than Marathon, some of which haven't gone as much as Marathon. But if we use Marathon as an indication as to where the miners have been in the same period that Bitcoin went up by 350%, Marathon in the same period from the end of the bear market in 2022 to its recent high, this went up by 992%. So virtually a 3x leverage on the Bitcoin price. And as you can see, since that particular high back in February this year, since then the Bitcoin miners have had around about a 60% pullback. So while Bitcoin has come down by 30% at its most, the Bitcoin miners have come down by 60%. So you can see the leverage of the miners works both to the upside, where we get massive rallies to the upside here, but also it works on the converse of that, to the downside. So these are the volatilities that people have to keep in mind. And if volatility is not your game, then obviously please don't join the miners. It really isn't for faint hearts. But if you look at it from an opportunity point of view, and you can withstand the anxieties of the pullbacks that you get along the way, then you can see that we can expect very big moves to the upside very shortly, because what we've got now is that we are very much at the bottom of that pullback that we've just had over 60%, and we're just moving back up towards the upside. So this may well prove to be an opportune time to get into the Bitcoin miners. And just to get to their previous high of this level here, $34, from the Friday close here, just to get to that level would represent 112%. Whereas for Bitcoin, this is the green line where it's currently at the moment, to get to its 73,000 previous all-time high would represent around about 14%. So you can see the leverage play potential is absolutely still playing out with the Bitcoin miners. And for those of you who are interested in our portfolio that we run with the private Bitcoin miners, our trading portfolio, which is the active portfolio where we do the ratio trades and any opportunities that we see in the market, from the start of January 2023, when we started with around $100,000, this is now running at $415,122 at the close of play on Friday. And the control portfolio, to see what would happen if we didn't trade at all and left the portfolio completely on its own with these miners that we chose at the beginning of 2024, that is now at 354,000. So you can see that active trading has really increased our amount. And because we're increasing the number of units in our trading portfolio, when this figure goes up, the differential with this figure becomes much, much greater. So we're already around about 4x up despite the 60% pullback with the Bitcoin miners. And the highest we've had so far is at about 720,000 with the trading portfolio. So we know that there's a lot of room to catch up in the coming weeks. And as long as you believe that we're in a bull market and that we've still got 12 months to go, then this may well be a great opportunity to join our Bitcoin miners private section here. And if you want to join us with the opportunity that's presenting itself with the Bitcoin miners, and you can handle the volatility, then all you have to do is below any of my videos here, you can use this join button here, or in the description box, there's a red button here as well. And for the price of a coffee per week at £12.99 per month, you can get access to 2 extra videos per week, which we cover the Bitcoin miners as well as Bitcoin, and look at all the opportunities that are currently available in the ratio trades that we do by moving from one Bitcoin miner to another. So we have 2 extra videos, one on a Wednesday, one on a Friday, exclusively to the Bitcoin miners members. And also you'll have access to this membership tab where we do market updates, as you can see here, every single day at the end of the day, at the end of the trading session. And this is really where we do all the ratio trades. I leave them all on here before I get into any ratio trades. They're all posted here. And this is where we leave a lot of articles and extra charts to know exactly where we are and keep everybody updated and moving along at the same pace towards the end of this bull market. And with the ratio trades, we've had quite a number of ratio trades that we started at the beginning of this year, around 24th of January here. And these are our profit and losses, all in these numbers here. So you can see we've done really well with the ratio trades, and currently we're in 3 ratio trades, and we continue to look for more opportunities whenever they present themselves. Okay, so we'll leave it there. I hope you found value in the video. If you did, please remember to like, and if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see the private members on the message board later today when the market's open. Bye for now.